Hello traders, happy Friday. It's 8:03 a.m. Chicago time on the 14th of June 2019. Thanks for joining me again today. Hopefully you can hear me nice and clear. I'm not blowing out your speakers and I'm not too faint. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a market that really has been balancing throughout the night. You should be getting me on YouTube at 1080p this morning. There shouldn't be any issues at all. There is a bit of a delay as it's built into YouTube. This morning, the Nasdaq is weaker than the rest. It's down 42 points or 0.55%. The leader this morning is again gold on a tear, trading at $1,354.10. Keep an eye on that. Gold's telling the story. Up 0.77%. The dollar is stronger as well, up 31.5 cents or 0.33. Crude oil is up just slightly at 52.34, up 0.11%. The Russell is about unchanged. The bonds are off. The 10 years are off 2.5 ticks. And the yen is off. So we have what looks like a really mixed bag this morning with a slight skew, just slight, to risk aversion. Money's just flowing into metals as the market kind of takes a defensive position. The big news, the big news overnight. Hang on one second. The big news overnight is China. China has released its. Let me look at this now. Its May industrial production, it hit a 17-year low, came in at 5% versus 5.4% estimated. There are concerns that China would need to introduce more fiscal stimulus to ensure 2019's GDP growth. The overall market is taking a defensive position in anticipation of the continued effects of this trade deal and the overall health of the global economy. In addition to that, we have this tanker attack on in the Middle East that has the U.S. Coming out in strength, crying out that Iran is the culprit, and Iran's denying it, and says that the accusations are unfounded. And frankly, everybody's got their opinion, but it just looks like we're looking for war at the moment. So, wars make presidents, as they say. So overall, I think the market is slightly nervous this morning, and that's where we stand. I couldn't do a trader bite yesterday, but I want to take a moment just to stay consistent, consistency is key. Habits are key to trading. And I wanted to just look at what we were expecting for Thursday or Wednesday. On Wednesday, the primary scenario was a push up into 28.92 and then a turn and a fall out of the range for a potential drop to 28.73 and a bounce or a fall. The secondary scenario is a drop, an immediate drop out of range that comes back, gets tangled up at the point of control, and then falls off again towards 73 as well. Here's what happened on Wednesday. Again, I didn't do a trader bite yesterday. Wednesday played out scenario 2 really, really well, but overall the market was really poor. I mean, the trade was really, really slow. But overall, we have what's expected, a push up into the prior point of control, come back, consolidate, and hold steady near lows up against this 28.77 area. Didn't quite get to 73 and didn't quite rise. It was just a very choppy day. Yesterday was rollover. Yesterday I started trading the September contract, and as you can see, versus our continuous 20-day volume per time slot, volume per 15-minute time slot. The volume yesterday in September was really dismal. We finished the day with 189,000 contracts. Generally we get pretty decent roll volume on the roll day. It's not as high as the old contract, in this case June, but yesterday was just outstanding. I mean, it really, there was just very, very poor volume in the September contract period. Given that roll starts yesterday, you would expect that there would be some spreads playing, calendar spreads that would be playing into the volume at least. And yesterday it just seemed like nobody was interested. For those of you who looked at the micro ES SEP versus June, you probably saw that the SEP volume and the spread was really awful. Right now, this is just a quote board from my data feed, from IQ feed. Right now, you could see that this is June right here. 203,000 traded so far, with September at 190,000. It is now perfectly safe to switch to the September contract as the market opens. Probably sometime within the first hour, September is going to overtake June, and June becomes history. Just remember, you do not want to be trading June past around Tuesday or Wednesday of next week. It starts to get tougher to get in and out. And much of what will be left in June are calendar spreads, which take priority. The calendar spread takes priority over first in, first out, depending on when the calendar puts in. So the algorithm for matching when it comes to calendar spreads changes or is different than the first in, first out method that's normally used by the exchange. It just isn't wise, I think, to switch to remain in the old contract past today. So carry the June till the end of the day, but really plan to trade September either today or starting Monday. Anyway, so that's where we ended up yesterday. Yesterday we came in, and the range again was pretty awful, 14 points, and it tested the entire range throughout the day. Really didn't accomplish much. We had an open out of range. We tested higher. There was a clear shot. Those of you who attended the impromptu, I showed the live trade. The live trade taken and why in this area. Short was taken in this area right here with an ad just above 64 half and 94 half and 96 half, and then looked for a rotation down to the IB low for the IB stat, and it finally broke the IB low for a successful trade. And that's not to say they're always successful, but we traded the impulse down, pull back to the mid VWAP right against the prior high and the OS high for short, and that worked pretty nicely. It took a little bit of time, but worked pretty nicely. But for the rest of the day, if we look at the profile, look at that profile. Ugh, just not pretty at all. Very boxy. The market is really trading out at every price. Is still a fight at every price. Again, the June contract doesn't look all that different. The market is really hanging on to these prices and trading the bejesus out of them as we're down here under the 2,900. So yesterday we took a poke above 2,900, 2,950 in the September contract. Again, that acts as a century figure for this contract and its options. We took a poke, and then we had this impulse down, and we retested that area in the afternoon for another opportunity to pull back on an outside-in type trade. And then the close gave us a pretty strong impulse on pretty decent cumulative volume. Cumulative volume is tricky this time of the year because of rollover, but look at this baby go. I mean, the very large lots were very, very active into the close. right into the last minute. There was a ton of buying that took place, and we can see that the aggressor in this case was the very large lot size, which is 100 lots or more, and that was expected to carry over into the overnight session. So let's bring that in. That was expected to carry over in the overnight session, and it did. We ended up pushing higher, but it just pulls back to the prior session mid again before it starts to test higher, and it just kind of sloshes up there before it starts to give it up into the European Open, which occurred right in here. So the overnight session in the SEP is light on volume as expected. So really the equivalent here would be about 180,000, which is in line with the past. And overall, the profile is saying that it's the market's slightly weak. The point of control is lower. We've explored throughout the range. There's no consensus on price in the overnight session, and we have basically we're trading below. We traded all the way below yesterday's range, so we have a higher high, lower low in the Globex session or the extended hours versus yesterday. Leaves us with a really not so great position coming in. Looking at the calendar and what could interrupt our auction this morning, we did just get the industrial production release, came in at 0.4, stronger 0.2. We'll also get cap utilization, but the big release this morning will be the Michigan sentiment release at 10 o'clock Eastern, about 45 minutes from now, expecting 92. This does move the market, actually expecting 98 for June. This does move the market, and then we do get a final number later in the month. And so that's the only thing that's on deck for today. Other than that, really the deck is clear in terms of releases. Now let's take a look at what's expected for today. But as always, I invite you to please hit the like button. Hit the like button before you leave today so others can find the channel. It is Like Friday, so please do take a moment to hit the like button and get that going. Let's take a look at what we expected today in our current scenario segment. I want to bring in where we've been a little bit. Here we go. Bablau. Before I do that, because I tend to run off right after this segment, I know it's important for a lot of you to have a look at CT Bookmap and see the full depth. Now remember, it's a little tricky. I know I'm sounding like a broken record, but order flow is a little tricky during rollover. So starting from yesterday all the way to next Friday morning, the order flow is tricky to read because of rollover. If you're someone who likes to travel once a quarter, right, and are hard-pressed to find a week in which to travel once a quarter, this coming week, expiration week, is an ideal week, statistically speaking, for myself and everybody I've ever backed. Statistically speaking, expiration week is a poor or weaker return week, and it's a great week to be off, to run off and do something interesting somewhere else. So here's the order flow and the heat map. We're not seeing very much in terms of clues in key areas. We do have some size over at 2,900 that's carrying over. We do see some size at 2905 that's carrying over, and we're seeing some size at 2880 that's been sitting there a while. Other than that, it's just a bunch of noise, really. So it's a little tougher to read the order flow today. This is CT Bookmap. You can find it at ctbookmap.pro. Really important tool, execution as well as reading the heat map type tool for me. I execute right on this platform. So here's what is expected for today. The reason I'm zoomed out here is so that we can see what we've done for the last few days, and so that we can also see that really the market is in balance and has been since the beginning of the week. So we broke higher on Friday. Um, we broke higher on Friday, and we've made two more highs, but for the last 2 days or so, we've been in a horrible sideways range, and we're still trading inside of Tuesday's range. So any exploration upwards is likely to template this area on Tuesday. This is where the high from yesterday comes from. It is the one of the LVNs left behind on Tuesday, and as we push through that LVN, we're likely to push into this 2910 area, and I'm looking at the heat map. The next size up is 2913 or 2905 and 2913. So overall, we're opening inside of yesterday's value area. We're in the middle of the range from yesterday. It is likely to be a choppy open today. I'm really tipped over on the side of today being really a poor day to trade. Just the way it's setting up. I'm looking for an open auction. Because of the way the overnight's set up, I'm looking for buyers to attempt to push higher, but ultimately I expect the buyers to fail and push to the overnight low at 28.85, and then make our way down into this 28.77, 28.77.50 area, the low of two days ago, break down and then push up. And I'm really being generous with the range, the expected range here. So this is a lot more range that I'm willing to give the market credit for. It's about 20 points, and this is to the downside, and I'm really giving it that much. Why am I giving it that much? Is it random? I'm giving it that much because we've been in balance now for 3 days, and some of these people are likely to get squeezed out. So that's the primary scenario, is a bearish scenario. The secondary is, again, an open auction that attempts to push lower, impulses up, moves into yesterday's point of control, and then starts to squeeze higher. And then the buy side range is only expected to be about 12 points. 12 points, not as big as the selling range. The range on the sell side is likely to expand. The range on the buy side is likely to be contracted and slow. This is how things are shaping up currently. Hopefully you're keeping up and you're doing the things you need to do to see results. I mean, my entire existence now is about having traders trade and think like professionals, and that involves either you create your scenarios and plan, the playbook for the day or the big trade of the day, whatever you want to call it. Those are common terms used in prop shops, or trade off of your key levels. But what's more important than the homework is tracking the outcome. Without tracking the outcome, you have no clue what's working and what's not, and what areas need improvement. And I cannot emphasize enough how important it is for folks to actually look at what they planned versus what they did, so you can find your errors. The more errors you shoot down and kill, the more likely your success will materialize. This is the holy grail. This is the secret to trading, is coming up with some edge, and there are many there, and most of you, if you traded properly on sim, you probably see that money's made. You take that live and then you lose money. So the edge is there. It's the execution that sucks. It's the execution that brings in emotion and brings in a lot of issues, and those issues are the result of errors. So go smack your errors. The only way to do it is to track what you've done versus what you've said you have done, so you can easily see what the issues are and eliminate those. Your life revolves around identifying errors and coming in and excitedly and determinedly attacking those errors and stopping the bullshit. Okay, excuse the French in case there are kids around, but this is what it's all about. It's a grind, people. That's what trading is. But it's a rewarding grind if you can get it right. Most people give up or run out of money before they do. Good luck. I hope I've helped you out this week. Take care.